All right, traders, welcome back. So we have a monthly swing trade opportunity on EURCAD. I've been looking at it for a while. As you can see, the market did a nasty drop down off of this zone, and we kind of pretty much filled the whole move in. So what I'm looking at is this. We have a major supply zone. There's the breaker structure, the fancy smancies, as I call them. Let's put that in. BOS. So we got the breaker structure right here. And so we're looking for this move right here. So we want price to come back into the zone. It's not going to just drop right away. And we're going to get the drop to come back down. All right. Something like that. And then a fling back up this way because we spotted liquidity off this move right there. Sellers tried to come back in. Buyers came up, pushed it down. So we're going to get a decent short position on the weekly, maybe, you know, from there to down here inside that zone. So like kind of like that. So that's the body of the zone right there. There's the wicks right there. So we're looking at it coming right there, bouncing off again, some kind of way. You can, let's see, this is probably all depends on a lower time frame when you get this entry because you can go on a lower time frame, find a better supply, and then we could get a better stop loss, you know, in this situation to make it a better arc, make it worth the trade. So that's basically what I'm looking for on EuroCAD. Now, let's go see. Now, it's beautiful that it's come back to the zone at a time like this. Today is January 14th. And guess what's happening January 25th? We have the press conference meeting for the monetary policy report from Governor, Senator, Deputy Governor. They hold their press conference to discuss the contents of this report around January 25th of 2000. Oh, that's 2003. So that's like in a week or so, something like that. So what ends up happening on these higher time frames is this. Price will go to a major supply zone and it's like magic. It'll come there, and then like in a couple of weeks, there's some monetary policy or some major news that's gonna either push it past it or reject it, and that happens pretty much with all of them. Like for an example, let's get off of this for a second. Let's go to CAD JPY just for a second. Now, this is what happened with CAD JPY, but there's a supply right there, right? Now, while I was coming up to this supply, we had yen, the Japanese yen had monetary policy news, and we had a big fly up into the zone and then a big drop down. And whoever's in this beautiful trade, congratulations to them. I didn't take it, but that's probably where it's going to land, right back where liquidity is at right there. So if they, boy, we would have took this, let's just say on a smaller time frame, we found a good little move or, something like that. We're looking at about a 7% gain off that move, off that supply zone. Most yen pairs did it. I think UJ just made yeah, UJ was off the supply too, also. Uh, odd JPY was too. Let's see. Yes, sir. You got to go further back, but when you go further back, you'll see we got supply right there. Then that's a smaller supply. Then we have these supplies that are right here, which that's probably where it touched. And once it touched it, you know, faked out, a lot of buyers involved, then the drop off. Kind of like that. So I think New Zealand JPY did the same thing. Um, was it on the daily? Oh yeah, I see it right there. On lower time frames, see those. See the thing with supply and demand that we don't learn, or we probably did learn. When buyers are trying to push the market back after a nasty aggressive move, if they can't push the market back down, the sellers get involved and make this big giant drop, which in terms leaves a lot of liquidity back at this area to make it a supply. So if we push it back over, and it's around the round area of the 8600 area, or I said 8600, just 86. So we put that right there and we come back, you see, maybe on a higher time frame, it looks better. It wicks it, wicks it, wicks it, and it's just this zone right here. And then obviously, if you would have got stopped out if you were trying to take it. And then we got the big nasty drop because liquidity was sitting right there. Liquidity sits right there because buyers were aggressively trying to get in and they got stuck and then dropped. This big drop happened off of these buyers trying to come in. So, of course, when it comes back to this area, it's going to be a reaction because there's a supply chain right there. There's a supply chain that the Japanese yen bank, they left their orders right here. And, that's pretty much what happened. Wick, 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 then drop. So, and you took a lot of drops too. It's a lot of liquidity in that area, but New Zealand's been pretty good too. That's why when I see stuff that wicks above it like this, because it's not high probability for me anymore. At that point, you're above the zone. I don't like that. What I like is this trade setup I didn't take right here. Stuff like this, where you got a weekly zone after a breaker structure. So you got a breaker structure. This broke a major structure on USD Mexican peso. So the buyers was trying to push right here, and look what happened. Drop. So when it came back, it collected more orders. But guess what? Not only was that a weekly, there's a daily right here. So it tapped it, tap, tap, tap. It didn't go all the way inside of it. It tap, 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 and dropped. And if I would have took this trade instead of just having it right there, we see it's coming back down to these lows where I think there's a daily demand. Yeah, some little or H4 or something like that. It's literally what I've been saying for the longest in the market is the market loves to mirror moves. So this big move, impulsive move, finally is getting mirrored after what is this? It took 1, 2, 3 months to make this big impulsive move, but it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 23, 24, 25, 6, 7, 8, 9, 30, 30. It took 34 months to mirror a long, impulsive 3-month move. But that's what the market likes to do. All moves get mirrored. That move got mirrored, at least halfway. But now, below all of these lows are liquidity. And USD Mexican peso has been flying up for the longest. It's time to just correct. Just probably just a nice correction. Probably go back up, but maybe, maybe not. But let's get back on EURCAD. I was just giving you examples. So let's go back to EURCAD. And even right here, check it out. This move is getting mirrored. That's okay. So we got breaker structure. So remember, put this in your notes. When it comes up here, it's going to do whatever it's going to do, and then it's going to drop. That's what we're looking for. And this is what I mean about taking a safe trade also. So let me show you a trade, a safe trade. Let's go to a lower time frame. I'm going to show you how to get into these trades, just in case you're not a part of my group. I'm just going to find a really good setup. And this one looks pretty cool. Let's find one more cleaner. Let's take these off. I want just a clean setup. I'm seeing them, but I want one that's clean. Super clean. That one's fairly decent. Okay. So this red candle, let me illustrate what I'm doing here. See this candle right here? That candle was trying to push down, but made this beautiful move up, right? And I'm sure there's some zone, yeah, somewhere over there. But for the sake of you already seeing it as a zone. So that candle created a demand, especially once this candle wicked and wicked down and created liquidity. So people that was already trying to like buy off this area got wicked out. So it grabbed liquidity already. And then it broke this candle. Right here was the break of that candle, right? Now we got this big impulsive move down. Now, how do you take a trade like this when it comes back and wicks down into the zone? That candle right there will be the rejection candle, right? That's the rejection candle. Pay close attention to the candles on the zones. Now, on top of that wick, right there, as soon as the next candle breaks that wick, that's your entry. So we would have entered right there on that trade because that's the break of the candle. I don't, and it could be a live candle too. We don't want the candle to close like this, and you get in right here. Look at all this move down. So we don't want that. You want to get in right at the break of the candle, and you could put the stop loss below the last wick, or you could put the stop loss below the zone. All depending on you. Sometimes I like to put it in the middle, like between here and here. Maybe I put it in the middle, give it a little room, right? So I can have a better RR. Now, as far as take profits are concerned on stuff like this, something like this is the supply. Right there is the supply. Look what happened. Came back, reacted strongly off of it. Obviously broke it, but the first initial, it'll be an uncontested supply. So once this happened, it broke and fell back down. And so this would have been the break of the candle on that one right there. And you would have been coming down to this red candle for your TP on that one. But we're not talking about that. We're just trying to show you entries. Break of the candle entry, you would have been coming back up to that supply. And it always comes back to the next supply. Especially at the nasty drops like this. There's liquidity sitting right here. The market wants to come back. It's going to come back to that area. It might not come back right away. This instance, it did. Maybe it keep dropping and then maybe 10 years later then come back up here. It's got to come back up here. And when it come back up here, it's uncontested. So it's going to react. The reaction, it's you getting in at the break of the candle. Entry. So this is a 1 to 5. If you would have got down here, it'd been a 1 to 3. If you would have put it below that wick, you had a 1 to 6.9. Now the reason why we get break of the candle, because at this point, the momentum is breaking the candle. So that means momentum is to the upside at this point once it breaks the candle. If it don't break the candle, it could just drizzle down and drop. But it's breaking the candle. That means we have some momentum off of the fact that, once again, we have a big demand zone right here. And this is confirmation that those orders were filled. Now that I've got the confirmation the orders are filled, I'm taking the break of the candle, and then I'm living with it with whatever happens. It hits stop loss, it hits stop loss. If it hits TP, it hits TP. It is what it is. But we're going off of rules when we trade supply and demand. When you have rules like that, just live with them. Especially you have your trading plan is your edge over the market anyway, and then deviating from your trading plan and deviating from your psychology, the market will have even a bigger edge over you than what it would have if you had nothing. So your emotions just make you below 50%. You'll just you'll just lose it all. You'll be up here still buying, and you'll be down here still selling when you got emotions. So keep that in mind. That was just a little educational situation for you. So when you take this EURCAD, let's go back to that weekly. back, 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 back. All right. EURCAD monthly. It's a monthly setup. So when you take this setup, you know exactly what to do. Now you can, if you want to, you can wait for a monthly break. That'll take the next 2, 3 months. But there's swing traders that do this. But me, we ain't doing that. We don't come to these lower time frames and find find a daily supply, something like that to buy off of. I mean, to sell off of. And there it is right there. Daily supply right there. So I'm gonna do that. So as soon as the daily supply comes up and taps this, now it's inside of the weekly or the monthly, probably weekly. Now it's underneath the monthly, weekly, and daily. So all we looking is for what? Let me do it again so you can understand. We're looking for a candle to do this. So let's bull. So you're looking for that rejection candle, wherever it reject, and then you waiting for a candle to do this. It might come back up again and wick all the way inside again. Once it breaks like that, we're in right there. That's our entry. We'd have shorted it right there. Stop loss below the wick. Come over here to the month. So you'd have been in right now, and we're taking euro down to here. Now, all of this is going to happen based off of that monetary policy report. So if Canada's bank gets better interest than Euro's bank, then this move will play out. But if it doesn't, I wouldn't take this move. If it's in favor of the Canada being weaker, we're gonna have a burst through of this, and then it's gonna come up here to the next one, and this will be obsolete, and then you'll have this one up here. So that's how you trade. Understand the monetary policy for every currency that you like to trade. Understand news. Understand all of that plays a effect in all these moves. Just understand that. I'm telling you right now, what happened here in December 09? Something happened where Canada was stronger than the euro. Some type of news event or whatever, and that dropped. And you thought this was reversal time, and it came down and gave you a newer low. Took out all those traders that were trading right there, and then turned around and went the way that you guys wanted to go. Understand the market. But the market don't have to really do anything you want it to do. You got the best trading style. The market doesn't have to respect any of it. Understand that. Understand that very well. But with that being said, I'll see you on the next video. Peace.